I'm terrified of the centralization and counterparty risk represented by large custodians like Coinbase and others that are in the marketplace today. Folks like us who are somewhat more public about being in Bitcoin, we have a much different risk profile than someone who quietly and privately holds Bitcoin that nobody knows about. And we're making Bitcoin as an ecosystem. We're extending its reach. We're making it more powerful. Ultimately, we're helping it defend its value proposition against encroaching centralization now and into the future.
Between 2030 to 2040 is where Bitcoin sort of hits that medium of exchange phase. And I think it'll be primarily driven by AI agents.
It's really interesting to see what effect AI and Bitcoin will have on each other as they kind of co-evolve. I thought we were just trying to build money, but we're building this very complicated time ordering global clock.
For someone who's listened to this, they still think Bitcoin is just digital gold or even more useless than digital gold. What would you say to them?
Wow, yeah, it's
Every once in a while, someone comes along to Bitcoin who doesn't just reframe it, but they make a completely new world out of it. That's who I'm talking to today. I'm talking to Dhruv Bansal. He is the co-founder of Unchained Capital, one of the leading Bitcoin security companies in the space. And we're going to go deep. We're going to talk about Bitcoin markets, how it literally not just fixes everything, but changes everything, what the world looks like on the other side. We're going to talk about quantum computing, security, how to custody and secure Bitcoin, the potential problems with Coinbase, and so much more. You don't want to miss it. Let's jump right in with Dhruv. Dhruv, thanks so much for joining me today. I'm excited to dig in here.
Yeah, me too.
All right, let's just jump right into the deep end here, Dhruv. You've said that Bitcoin disrupts everything, which we talk about that. It fixes everything, disrupts everything. It's a big claim. So what do you think is the single most misunderstood way that people really underestimate the real impact that Bitcoin could make or will make?
It's a hard question to give a succinct answer to, but I will try. I think Bitcoin is money. I always start from that. And because Bitcoin is money, people want to acquire it. That's a pretty simple statement, I think. What's maybe underappreciated is there's different ways you can acquire things for Bitcoin. You can kind of trade Bitcoin for them in, a coffee, that's our standard example. Or you can kind of trade for them like in a more, let's say, computational way, right? Like there's a transaction or there's some piece of code that is executing and somehow that represents the trade. And I'm not going to say that one of these is a better or worse way to interact with Bitcoin. It is money. You can kind of trade it for what you want. But I think people underestimate sometimes the programmability of Bitcoin and what that second mode of trade might look like, right? So we're excited to talk about Lightning. And again, we talk about Lightning being used to buy coffees, but maybe we don't talk as much about how Lightning could be used to buy packets or to structure the topology of a communications network or to exchange information online and perhaps even attention. And I think things like that are underestimated. They're not. It's hard for me to predict whether we'll buy and sell coffees first or whether we'll buy and sell tweets and thoughts and ideas first. I think it depends on which is harder to do and which is more valuable. I think sometimes we think that, of course, the most natural thing for Bitcoin to do is to help us engage in circular economies and buy the coffees and buy the things in our local area. Maybe that's true, but that requires a lot of density of people that want to engage in that behavior all in one place, interacting with each other to kind of build those markets. Whereas I think part of what's so cool about Bitcoin, the global peer-to-peer marketplace that already exists, is that oftentimes you're trading with strangers all over the internet. And so potentially the thing that we would want to trade first is the thing that is, you can't buy without Bitcoin. And that might be something like an uncensorable communications channel or some other kind of more technological cryptographic thing that you're trading for Bitcoin. I think Bitcoiners, because we're skeptical and we're conservative, have maybe ceded some territory in this area. And there's a general consensus amongst investors and so forth that somehow Bitcoin is money, but things like Ethereum and Solana and whatever are the technologies that we will use to build these more distributed, decentralized, peer-to-peer type marketplaces. I'm sure if you ask ChatGPT, that's the common wisdom that'll kind of reflect back at you. But I actually think there's a lot of room there for Bitcoin to make an impact. And that doesn't mean that necessarily, we're putting the internet on Bitcoin or that the blockchain contains the website or anything as literal as that. It just means that Bitcoin's really powerful money and people can be incentivized to build powerful, capable networks because they want to earn that money. So it's kind of on us to be clever and solve that problem and figure out a way to get the kinds of markets we want to build operating on Bitcoin without kind of ruining Bitcoin, right? So it's a balancing game. It's really hard.
When I think about like going back through history and looking at these different technological pivot events, these technological revolution events that we've had, it's like two things. Like number one, when we get a new technology, it gives us a new set of building blocks to build things that we couldn't have imagined because we didn't have the building blocks to build them. One. Number two, because our brains are comparing mechanisms, we try to understand them by comparing them to things that we have, which maybe is like the first killer app that something might have, like electricity. The killer app was a light bulb, or the internet, the killer app was kind of like email. Doesn't mean that's all they are, but there's like a killer app. But then what we know about that word, the very definition of that word can change. So then, for example, like what we used as light changed and the way that we think about light changed, or information pre-internet was like nightly news and newspaper. And now information's like on a picture some kid posted about the beach in Bali, and I know the weather and the water temperature and all the waves and all that, right? And so I guess when we think about money and like Bitcoin, we think about like the killer app. So the killer app certainly is money right now. But I think maybe what you were saying, or maybe it's just my own bias was hearing, but maybe the very different definition of what we think of as money or the way that we use money could just change completely.
There's so many cool related ideas there. I think the first thing that you said reminded me of like an idea that I really like due to Stuart Kauffman, which is this phrase, the adjacent possible, right? That like you can't predict what's going to happen when you add an element to the set because the adjacent possible set of combinations just became exponentially larger. So, he's often, I think, pioneering that idea in the context of, let's say, the evolution of life or metabolism. It's hard to predict what new chemicals you can form if you add one more reagent to the swimming pool of life because chemistry is so rich and there's so many combinations. And similarly, I think there's ways to analogize that in our context here. If you build a new kind of market that sells a new kind of good, you've now created a whole bunch of interconnections between that market and all the other existing markets that existed there. And there's a new and richer adjacent possible of things that you might not have anticipated that you were even solving. Certainly, Bitcoin is money and money connects everything. And again, this comes back to my prior point about what we think we might want to use Bitcoin for might not be the very first things that really Bitcoin scales as. I think you kind of see this even in the conception of Bitcoin, over the first 10 or 15 years of its life, right? That this notion of, is Bitcoin a peer-to-peer electronic cash that we want to have high transaction volumes in because we're constantly buying stuff in it? Or is Bitcoin this store of value, ultrasound money that is very hard to seize and is censorship resistant? It feels like that second narrative has won out to a degree, I think partly dictated by the actual capabilities of the technology and what Bitcoin excels at versus what Bitcoin finds difficult. But we may surprise ourselves in that new things come online that suddenly become killer apps, right, for Bitcoin. Today, I would definitely agree that the killer app for Bitcoin is self-sovereign, inflation resistant, seizureship resistant money, and as a form of savings. But people want to earn Bitcoin. And if we offer them Bitcoin to do things for us, they might do those things, including storing data for us or transmitting data for us or selling us energy or all sorts of other things, which aren't necessarily where we started when we first said peer-to-peer electronic cash, but might turn out to be the things that are most valuable and therefore the things that collectively we're most willing to pay Bitcoin for, and therefore the things that get built ahead of other things.
Yeah.
There's a phrase that I'm trying to coin that I think is really interesting called like the beautiful surprise, which is just the idea that when you start out to solve a problem, you may not realize that you actually have a very different kind of problem to solve ahead of you, but it's kind of an example of this kind of pattern. I think for Bitcoin, at the lowest layer, I think the beautiful surprise is related to time.
It's a beautiful surprise if it's a good surprise. Otherwise, it's a lot of unintended
Yeah.
consequences. It's
Yeah,
just,
but maybe that's the flip side,
that-
right? Like the flip side of the law of unintended consequences is the idea of the beautiful surprise, right? That like just as there are things that go wrong that you don't expect, there are some beautiful problems you wind up having to solve. So again, for Bitcoin at the lowest layer, I think it's the notion of timekeeping and how do we collectively in an adversarial peer-to-peer context without a central coordinator order things in time? And the answer, like that's a very hard problem. And I thought we were just trying to build money, but we're building this very complicated time ordering global clock. That's fascinating. And I think at layer one, when we're talking about transactions, like we're just trying to build a payment network just to exchange Bitcoin with each other, but we wind up having to implement an entire virtual machine and a programming language. And then we argue about what's considered in scope or out of scope or consensus in this very complex setting. I thought we were just trying to exchange money. How do we get here? I think as we move forward and we try to build new things with Bitcoin, there'll be new beautiful surprises. And I think we're already starting to see one, right? Lightning, for example, is just one example of the of the many layer 2 ideas that are out there with new things that we can build with Bitcoin is ostensibly, again, a micropayments network that we can make fast, cheap, scalable payments with it. But it's remarkable to me that so much of the discourse and the challenge of Lightning is actually figuring out how to build a topology, how to connect all the Lightning users together and to route payments through that network. So in some sense, again, we're building a payments network, but we're actually building some sort of weird proto-internet.
Yeah.
That's another beautiful surprise. So again, to me, it's like, in order to solve this problem, you have to solve this other problem you didn't expect. And that's just happening through the natural dynamics of markets and incentives.
And then when you build that thing, what else can it be used for? So with
Right.
Bitcoin, we know that it's the most secure network in the history of the world. So what else could we do with a secure network? Well, probably all kinds of things, for example, right? Like with steel, like we were just trying to come up with like a harder metal, and we didn't know that we'd like build skyscrapers or maybe spaceships one day, right? So it's like, what else can we do with those things? And then also like, can we combine a whole bunch of things, right? So it's like, maybe we don't need gold and silver and checks and credit cards and wire transfers. Like, why can't it all be together? Right, for example. So there's a lot of things that we just don't know, but it's certainly fascinating to think about it. But we have something very valuable. We're not exactly sure what it means, but we can start to see some of those things. And so the killer app being payments. And you mentioned that because it's so valuable, then the incentive level is very high for people to want to get more of it. So then to build on it, to work on it, build companies around it, etc. Which then has created a problem. Well, Bitcoin solved the problem and it created a problem at the same time. I think about building wealth as in solving problems. And the bigger the problem you solve for the more people, the more value you create. You create personal computers for everyone on Earth, like Bill Gates, you'd be worth a lot of money. And maybe the oldest problem in mankind has faced with is, how do I secure my property in a way from being stolen? Like, you're gonna steal my chickens, so my neighbor and I form together, or then it's a village or a city or a kingdom or a country. And so we've created something very valuable, and we're solving a problem of how do we secure something, but then we have the struggle of that, right? Of like, how do we secure the Bitcoin? And so I know you've built, maybe one of the world's top Bitcoin custody firms. How do you think about securing this asset now, maybe from an individual business or institutional level? Every day we see headlines about inflation and debt and diminishing control over our own money. That's why I always come back to Bitcoin, because it's built for generations. It's built for legacy. But protecting your Bitcoin legacy the right way, it's not always simple. It demands discipline, focus, and the right partner. Now that's why I personally use Unchained Signature. It's a premium private client service for serious Bitcoin holders who want expert guidance, resilient custody, and an enduring partnership. Now with Signature, you're paired with your own dedicated account manager, someone who understands your goals, helps you every step of the way. You're gonna get white glove onboarding, same day emergency support, personalized education, reduced trading fees, and priority access to exclusive events and features. Unchained's collaborative custody model is designed to provide the same security as the world's biggest Bitcoin custodians, but for those who prefer to hold their own keys. Now, I've been using and recommending Unchained for years. I even got my parents to set up with them. So if you want to get set up, check out Unchained Signature at unchained.com/markmoss. And as a loyal listener, I got a discount for you. Just use code MOSS10 at checkout to get 10% off your first year, because your Bitcoin isn't just for life, it's for generations.
Yeah, I mean, I think that's, again, one of the things that's so remarkable about Bitcoin is that its custody model relies on cryptography, and it relies on us as users and holders of Bitcoin to participate in our own custody. This is in some sense a very old school model of what wealth should look and feel like, right? That is something that you have to spend resources to try to protect yourself. And that if you fail in that endeavor, it can be taken from you, it can be stolen, and there's very little recourse to kind of come back to. I think centralization of banking or other infrastructure is so attractive on some level because it takes away that burden of responsibility from us. Of course, there's a cost, there's a price to that, right? We lose a lot of freedom, we lose a lot of control over our wealth. Our interests are not necessarily aligned with the centralized service providers who seek to solve these problems for us. They get more interested in how they can use our money, for example, to make money for themselves, rather than how they can protect us better, how they can enrich us like more quickly. So Bitcoin offers us that capability of like, well, we get to protect ourselves. And then of course that, as you say, creates a problem, right? Well, okay, now that you can do this, how are you going to make sure you don't screw it
Right.
up, right? Like, because there's a whole host of ways, as we all know, as Bitcoiners, of screwing that process up. For me, very early on in the history of Unchained, before we really thought of ourselves as a custody company, we really started on the financial services side. We wanted to offer credit to Bitcoin owners because we felt like that was a major missing component of, if Bitcoin is money, you should be able to do the things that you do with money, and including borrowing and lending. And that was difficult in 2016, 2017 when we were getting started. And so we started, with our lending product. You can, post Bitcoin as collateral. You can obtain U.S. dollars as a loan. Of course, custody is very integral to that process. We want to make sure that the collateral is kept safe, both for the concerns of the creditors who are lending us money to lend to our borrowers, but also, of course, for the borrowers themselves to get that collateral back. The whole reason, of course, that they're borrowing is because they don't want to sell their Bitcoin, right? So it's very important to preserve that collateral throughout the lifetime of the loan and beyond. It's interesting, when we started the business, I had this presumption, I guess, that why would anybody ever trust us with their Bitcoin in a financial product like this, in a loan structure like this? Like, we really bent over backwards really far to try to prove to our clients and our borrowers that, for example, we weren't rehypothecating their collateral, right? We would give everybody a fixed address on the blockchain. We would say, your collateral just lives in this one address. And look, you can monitor it because Bitcoin is an open network that we can all access. And that's a lot better than the kind of protection you might get if you had a different financial asset that had a more traditional custodial model applied to it that you were borrowing against. What surprised me to a degree was, in that era, perhaps how few people actually seemed to care about that privilege or that capability, that so many people were maybe conditioned by the traditional fiat system or whatever, like more interested in, hey, but I want a lower rate. And in order to get that lower rate, I'm more than willing to surrender control over my collateral. And in fact, then the problem sort of flips over and says, well, even if I'm not borrowing dollars for some expenditure, I have Bitcoin. I in fact would rather give up control over my Bitcoin and earn yield on this, right?
Yeah.
And so there is this notion of, to access 5, 7, 10% yield, I'm willing to put at custodial risk this asset that was growing at 100% a year. So it's interesting how sometimes we create the problem, and then we sort of create the solution again, in this case, of letting somebody else then hold the Bitcoin, which then of course creates the problem again, which is we have counterparty risk and stuff that we were trying to flee from, perhaps, with the advent of Bitcoin in the first place. Unchained solution to this kind of problem, of course, is collaboration. And I think that kind of comes back to what you were describing as like sort of the origin of humanity and society, and the notion of building wealth as this collaborative construct. I think there's some great economics line, right? Like the value of diamonds and water, right, are very different to like kind of a thirsty man in the desert versus, a person in the city in comfort in their home, right? In some sense, wealth is always context dependent. And I think Bitcoin definitely teaches us this, right? We have things like Bitcoin's testnet, and we have things like Bitcoin Cash, which in most ways are exactly like Bitcoin. It's sort of hard, unless you're maybe well versed in the details here, to convince yourself why Bitcoin Cash should not be valuable and why Bitcoin testnet coins should not be valuable. Whereas Bitcoin, which again works pretty much the same way, should be very valuable, right? It's an admission that the context in the marketplace, right, the opinion of all the other holders, is part of what makes the currency valuable in the first place. So there's already this sense in which Bitcoin as a social construct, or as a thing that humans believe in, is part of what endows it with value in the first place. Of course, it's designed to deserve that value and that respect. It's a good form of money, whether people recognize it necessarily or not to begin with, and that's of course, ongoing process of Bitcoin's monetization, is more and more people coming to that realization, right? Watching programs like this, and the light bulb going off again for them. But Unchained really likes to bring that notion of collaboration right into the custody, right? So, part of the reason we keep our homes safe and we keep our other valuables safe is because we're not always necessarily just relying on ourselves. We're part of communities, we're part of tribes, we're part of, family households, and we rely on each other to create security. And so we try to do that on Unchained as well. Bitcoin is not just money, it's programmable money. And so we don't have to have just one private key. We can have multiple private keys. We can use multisig. We can use multi-party multisig, which is what collaborative custody really is, sharing the burden of protecting Bitcoin amongst different parties that have different capabilities and are economically aligned to deliver on the goal. So in the case of Unchained's lending product, Unchained, our lenders, our borrowers, we all have the same incentive, which is to keep the Bitcoin safe. And by spreading the keys out in that model, we're able to all separately achieve that objective. And if one of us should fail, the others can pick up the slack. That same idea we now apply just to custody without the lending context. So if you just want to keep your Bitcoin safe generationally, maybe one of the best ways to do it is to rely on Unchained or other people and entities that you know in collaboration to help you keep your Bitcoin safe over time. It's an interesting kind of like no man is an island picture of where security ultimately comes from. It comes from not just yourself and your capabilities, but those of the people that you choose to trust. And I think that's a pretty powerful way to ensure that Bitcoin survives generationally.
Yeah, I love that framing, and it makes me think. Back in the pandemic days, 5 years ago or so, a lot of people thought they could just go disappear, be a man on a hill by himself or whatever. But it's like, no, that your security is not very good if you're out there on your own, right? You're better off together in a tribe, a village. I recently built this house down in Mexico. And it's kind of out of town, out on this beach. And years ago, there was a lot of problems with break-ins and stuff like that happening. But now that there's like enough houses that are kind of getting built out there, some of the neighbors are kind of watching. Now there's really no crime out there, right? And so it's the power of sort of having more people there collaboratively working together.
I did similar ones many years ago. I bought a place in Colorado and I kind of built out a small like shed and then a smaller house out there. And one of the things I learned kind of being a city boy is when you move to the country, so to speak, probably the first thing you want to do is you want to make friends with your
Yeah.
neighbors. Is you're going to need them in a way that you maybe don't need them as much when you're living in a city and you have this assumption of all these services and so forth, right? So yeah, totally agree with that framing that ultimately security comes from other people, it comes from context, and if you really want to do it yourself, like you're kind of that mountain man. The burden is really on you, and the cost of doing it successfully is on you as well as the risk, and that's hard for most people to bear on their own.
So after working on this for so long, what would you say for an individual wanting to secure their Bitcoin, wanting to take that responsibility on themselves? What do you think leads to the biggest mistakes trying to secure my Bitcoin? Is that me not spending enough time to understand what I'm doing and build a robust enough system, or is it trying to build something too robust that's too complex? Like, where's the danger? How should an individual wanting to secure their Bitcoin think about that?
Yeah, that's a great way to frame it. And I think both are issues. I think if you're technologically or like maybe not so savvy, you're not a computer or programming type person, or if you're just new to Bitcoin, perhaps even, I think it's really easy to underestimate uh, the threat landscape, right? We constantly hear this where people will claim things like, "Oh, I was using a hardware wallet and I thought that would be safe, but then my coins were stolen." And people are like, "Oh, how did that happen? Was there some firmware bug with Ledger or Trezor or something?" And of course, it comes out, no, no, no. This person just didn't understand the security model, and they took their 24 words, which are their analog backup, and they put them into Google Drive,
Yeah.
or they put them into some other tool that ultimately was compromised. And I think again, people may not realize these aren't random 24 words. Like the 24 words are chosen from a very short list of just a few thousand words. It's very easy to write computer programs which look for contiguous sets of words which come from this list. And it's very easy, therefore, to flag in even a huge volume of data, the tiny subset of information which might represent Bitcoin private keys. And then, of
Mm.
course, it's trivial, given Bitcoin private keys, to quickly scan the blockchain and determine, oh, there is indeed a balance associated with those. And as soon as that's determined, the funds are already gone. It's too late,
Wow.
right? And so if you don't have this picture of it's not just random words, it's actually very easy for a computer to tell that this is a private key, even if it looks like random words to you, the human, you might make that mistake. And I think to your point, the converse is that you learn all these things. You start getting really paranoid. You start getting very clever, right? And of course, the greatest enemy sometimes of a person's attempt to keep themselves safe is themselves, right? You lock yourself out of the system that you've built. You are so paranoid about backups or analog backups or sharding or some other technique that you have decided you want to rely on that you just forget something over time. And you didn't rely on social key recovery. There's no hard analog way that you've built to get back into that, and you've lost yourself. You've lost your own coins. This is something that I think paradoxically has happened to a lot of Bitcoin developers and OGs in the space, partly because maybe they got their Bitcoin so early that there weren't established solutions and best practices. And so they thought they were clever and they sort of came up with a Rube Goldberg machine and it locked them out, or worse, it destroys their Bitcoin. Finding that balance is really, really hard because you do need to think like a programmer. You need to be aware of course, the cryptographic context and all the rules and little details. But you kind of also got to think like a psychologist, perhaps, or a psychiatrist, or you got to think like a financial planner, right? You got to be aware of the fact that no matter how good you are at it, one day you might not be around, right? You may pass, and then you have this really complicated Rube Goldberg machine that your poor spouse has to inherit and navigate somehow. And is that going to be successful, right? Like, how can you project your custodial security past, your own mortal lifetime? That's a very challenging problem. Again, historically, the solution has been just let some financial institutions solve that problem for you, right? Documents, paper, in-person interviews, they'll figure it out. They'll move the funds. But of course, that control is impossible in Bitcoin unless you surrender. Again, collaboration is a great way to kind of split the difference and decide how much responsibility you want to bear for yourself, for your heirs, how much you want to delegate out to an institution like Unchained or to other parties. And because ultimately, I think everyone's context is somewhat different. The fact that this is somewhat tunable, that you can make choices in this process, choosing the number of keys, choosing the participants that should be protecting you, choosing the vendors like Unchained or others that you want to work with. It helps you tailor your stance based on the actual threat environment that you're in. I think, truthfully, folks like us who are somewhat more public about being in Bitcoin and stuff, we have a much different risk profile than someone who quietly and privately holds Bitcoin that nobody knows about. And we may want to evaluate different strategies, and we might want to spend more or different amounts on protections and mitigations, just because, again, our circumstances differ. But what's so cool about Bitcoin and the emerging, landscape of firms like Unchained and others is that that's possible.
Now, what about for like institutions? So right now we see it appears that Coinbase appears to be like the custodial solution for institutional Bitcoin. You know, everything from the Bitcoin treasury companies to ETFs, et cetera, maybe the biggest honeypot out there. Is it different for an institution where like they can't just do their own multi-sig or collaborative custody because they're so big? And then there's also maybe something in the regulations that make them use a custodial partner. So is there something different where at some point it gets past the point of doing that collaborative custody? I need to trust a custodian. So number one. And then number two, do you think that centralization creates potentially an even bigger attack vector or bigger problem?
Yeah, I mean, just to answer that last question, I'm terrified of the centralization and counterparty risk represented by large custodians like Coinbase and others that are in the marketplace today. I think there's a few million coins collectively across those top few custodians that are backing the ETFs and some of the largest institutional Bitcoin holders in the world. I understand how it got here. Like it makes sense that these are the choices that were made based on what I understand about the market and regulatory asks and other kinds of things. But that doesn't mean it makes me feel any better about it. Yeah, I think one might imagine, right, that as the co-founder of Unchained, a collaborative custody firm that does not have the same custody model as Coinbase, I might be excited to see, a bad outcome for Coinbase, a hack or something that someone manages to steal huge amounts of Bitcoin. But honestly, oh my God, I could not want that less. That is an apocalyptic outcome in the Bitcoin industry, and it would set Bitcoin adoption back, I don't know, 10 years or more. I don't want to see that happen. I don't control Coinbase. I don't control people's decision to use Coinbase exclusively above many other custodians or other options and models. But I can work on my own model. I can make it more accessible over time. I can try to increase the scope of people that are able to use collaborative custody to not just, early Bitcoin adopters who already have a hardware wallet, but to increasingly new waves of people who don't have any Bitcoin at all, who are coming into Bitcoin for the first time, maybe in this cycle, and they're seeking for, okay, what is the right model for me to use that is safe, that I'm not going to get spearphished, that I'm not going to get locked out, that, I'm not going to obviate some of the positive qualities of Bitcoin by picking, a custodian from the get-go. To your point about institutions, I think you're absolutely right. It is way harder for institutions to practice self-custody or even collaborative custody than it is for individuals. That's an absolute fact. I know that because obviously I am a Bitcoiner personally, but also my company Unchained has to protect Bitcoin private keys that we use, on behalf of our clients. And the way that Unchained does that is extremely different and far more complex and involved than the way that I personally have to engage with hardware wallets or other tools. It is easier for me, partly again because Unchained itself exists, so I can be a client of Unchained and benefit from their involvement in my own wallets. But it is much harder for a company. I think a simple observation is that, hardware wallets are literally designed to fit in the palm of your hand, right? The palm of one hand, right? It's not something that the whole organization or the whole compliance or finance or accounting team or the controller or whatever can access in that way. It's literally something that goes in one person's hand. That's not a good ergonomic form factor for an organization. What is the analog that an organization should be using? Like, I don't think there exist like those tools quite yet. Unchained, I think, has tried at various times to build things for institutions or to entice institutions to adopt self-custody and collaborative custody. But I think part of the reason those things don't exist right now is because institutions aren't demanding them in the same way. They're quite comfortable, actually, perhaps too comfortable, working with a centralized custodian like Coinbase. I think there's a misunderstanding, perhaps, from a lot of institutions that reputation and brand and time in market somehow equal security. They contribute to security. And I'm certainly not trying to say that Coinbase is insecure. I think Coinbase is amazingly secure. I think they do a really good job protecting their keys. And it's part of the reason they've lasted for so long when so many other custodians and exchanges have been hacked and have been breached. Coinbase is really good at what they do. But you don't have to make that choice. You don't have to rely on just one company if institutions themselves, if the regulators that institutions are often beholden to, right? If they come to understand that things like collaborative custody are realistic options for even institutions to adopt, and they make that part of their requirements for SOC compliance or for other kinds of regulatory oversight that they have, that could be a compelling reason why institutions start to switch. But ultimately, I don't think regulators are that powerful in this space. What will really cause institutions to switch over to self-custody and collaborative custody is the same thing that caused individuals to do it. And I think that's time and market,
It's
right? Like
pain.
most,
It's pain.
yeah,
You
exactly,
only move when the
exactly.
pain is high enough, unfortunately.
Mhm.
And to the point that you made earlier, we don't want to see that pain. So hopefully, there's a way to learn from others' mistakes and not have to feel that pain on your own. What do you think about the view that Satoshi actually created two digital scarcities? So there's the 21 million coins, but there's also the limited block space.
Yeah.
And the potential, I mean, it seems like in the future, however far this is, in this Bitcoinized world, most people won't be able to custody their own Bitcoin or transact on the main chain.
Yeah, I think, first of all, I think that's an inevitable conclusion based on the structure and dynamics of Bitcoin and how it works. I don't think of it as a direct monetary network that 10 billion human beings and 100 billion AI agents can directly use. And I think that's okay. Um, there are ways to achieve sovereignty and control and to align interests of users and the institutions that serve them without having everybody be directly on the blockchain in the same exact way. I might prefer an outcome like that, but I don't know how to engineer an outcome like that. And I'm willing, therefore, to make certain compromises and approximations in that ideal outcome in order to actually get something built and have it be real. Like, it's better that some people can do it rather than no people can do it. So a world with Bitcoin, even when not everybody is on layer one, is still a better world for me. I think today we have a little bit too much of a binary kind of picture of like it's either on chain or it's not, and therefore it's like not good that it's off chain. I think in the future that's more of a continuum. There's on chain, on chain, on chain, like the thing that we do today, frankly, for very low cost, for costs that I think will seem crazy in just 10 or 20 years.
Yeah.
That an individual like me could send an individual like you a direct payment on the blockchain and afford that, just from and think of it as change and even think of it as cheap.
Right.
I think that's going to be a remarkable feeling. One of my favorite statements about Bitcoin transactions that I attribute, I think, back to Nick Carter is you should think of every Bitcoin transaction like a container ship. It's not something that two people send back and forth between each other. It's something that is multiplexing a large number of people's economic demand into this one resource. I think there's a similar story about communication, right? That when we first started building telecommunications networks, one wire, one signal, one conversation. And today, when we have giant fiber optic cables crossing the ocean, it's not one guy talking through that cable. There are thousands or millions of data streams at one point being multiplexed through that same physical resource. And I think of Bitcoin transactions as things that we will have to get so good at engineering that they work the same way, that we're able to jam a lot of demand and economic throughput into these structures. And part of the way that we'll have to achieve that is, I think, having to use layers. But I don't think, again, that somehow being on layer two and not having a layer one UTXO to yourself or something is some sort of, I don't know, uh, unacceptable outcome. I think it's a different class of sovereignty. I think it will have different capabilities, but we shouldn't judge that by what it has today, right? I think layer two today is very basic and impoverished compared to what it could be a few decades from now, when the pressure and the demand to build those things is higher. So yeah, I absolutely endorse that vision of a layered, hierarchical, but free and open way of engaging with Bitcoin that is cost effective for wherever you happen to be in the stack rank of people economically throughout the entire globe, right?
Yeah.
Absolutely agree with that. I also think it's really interesting to go back to your comment about two different kinds of scarcity, because that's something I very much see that as well, that I agree that there's kind of two layers of market making going on in Bitcoin all the time, right? One is this kind of more what I would view as a more fundamental market related to the scarcity of 21 million Bitcoins, related to the release of those Bitcoins into circulation, to an ask and bid process that has to price in computations the release of those coins. And I think there's a very different but related market for Bitcoin transaction settlement, where exactly as you say, the scarcity there is the block size and the notion that we have to communicate and put all this data into consensus at a global scale, and that's expensive, but it's a different kind of resource constraint than the idea that there's only 21 million Bitcoins or that time passes in the same way for all participants, right? These are different but related ideas. I think part of the brilliance of Satoshi is in not trying to solve all the problems of money with one solution or even one market, but building different markets with different characteristics, different trading behavior, and coupling them together to create something larger than either one is on its own. And I think that's the pattern that I want to see us in the Bitcoin community extend over time, is building new layers of Bitcoin software, not blockchains per se, but software that are marketplaces that allow us to solve new kinds of problems, and that every new layer that we add, whether it's payments, whether it's lightning channels, whether it's the exchange of packets or data, we're incentivizing people with Bitcoin to help build the services in the real world that deliver this value proposition, and we're making Bitcoin as an ecosystem like broader. We're extending its reach. We're making it more powerful. And I think ultimately we're helping it defend its value proposition against encroaching centralization now and into the future.
Let's talk about the layers for a minute, because when you look at money itself, you had gold sort of as like this base layer, settlement layer, and then gold was too slow to send around the world across the ocean. So then we had like layer two, so a ledger, and then we could have paper money. And then maybe that was too slow, so the banks gave us checks, and that's like layer three. And then checks were slow, so we got credit cards as layer four. And now we have like Venmo and Venmo and PayPal are competing on like layer five or something, right? Maybe the internet is sort of also stacked up in that same form of layers with different, SMTP protocols, HTTPS protocols, etc. So when you think about Bitcoin stacking up in those layers, you've talked about it sort of as these markets being stacked up on top of that. So what are you referring to specifically when you talk about these being like markets built up around Bitcoin?
I think they're like, again, it kind of comes back to the idea that people are incentivized to want to earn Bitcoin. And therefore, if we're smart, we can build software, right, that defines markets in which people get paid to do exactly the things we wanted them to do in the first place. Again, I think that's what makes Bitcoin so robust, is we aren't compelling people to provide the services of Bitcoin mining and running nodes that allow Bitcoin to operate. They're incentivized to do so. And it's not even necessarily because they're ideologues and they want Bitcoin to succeed, though of course they do. It's because they're getting paid in Bitcoin to do it.
Right.
And it's very powerful as an incentive. I think one of the coolest things about the kind of market that I envision is even though it has no regulation, it has no central control, there's no one inspecting the product that is being sold, there's no one accrediting the vendors, there's no reputation dynamics amongst Bitcoin miners. Somehow, no one has ever engaged in fraud in this marketplace, which is to say the Bitcoin mining community has never sold the Bitcoin network like a fake block. Like that's never happened. Nor has anybody somehow managed to get a fake transaction inserted into a block that didn't pay the miner the transaction fee that was claimed to be paid. The protections that exist for both consumers as well as sellers in Bitcoin's markets are extremely strong. They're cryptographically guaranteeing the kind of trade.
Is that because of the incentives you mentioned? The incentives, so you're more incentivized to be a good actor than to try to cheat the system, or is it because the cryptography is so strong there's no way to be a good actor, or maybe a combination of both?
It's definitely a combination of both. Absolutely, right? That like because the cryptography is so strong, adversarial behavior is so easy to detect, and therefore it's very hard to profit from. So you may as well just follow the
Got it.
rules, right? In spam, like, it's sad to say it because it's hard to imagine a person that would fall for it. But the Nigerian prince scam works, right? If it didn't work, people
After
wouldn't do
decades,
it.
it still works.
It still works. It must be working,
Yeah.
right? Like, and so it's just one of those, like, if you email is like, language is just such a weird porous mechanism. It's not the same thing as code, right? And code makes things very precise and allows both miners and participants in the network to be very confident of the economic exchange, the voluntary economic exchange they're participating in. Each side knows what they're going to get,
Yeah.
right? The miners know they're going to get the Bitcoin. They're never not going to get it if they render service. And as consumers, we don't care which Bitcoin miner mines the next block. We don't care like what order our transaction appears in the block. All we care is that the trade completes, and it doesn't matter who's on the other side of that trade. That's a very powerful kind of market,
Yeah.
right? Because it leads to decentralization. We don't need to have a preferred miner that we subscribe to. The market as a whole of miners is satisfying the demand from all of us as consumers. And I'd love to bring properties like that to things beyond the release of Bitcoin into circulation or the settlement of Bitcoin transactions. I'd like to see payments work that way, that we're very confident that our payment will succeed in layer 2 because it's very profitable for someone to complete that payment. And I'd like to see that extended, right? I think again, as mentioned earlier, that one of the beautiful surprises of building a payments network is you're also kind of building a mini proto-internet. That's very much what the Lightning Network is structured as. And so the protections that we associate today with economic activity, like making payments and settling Bitcoin transactions, if we design the market correctly, can be applied to the exchange of information for Bitcoin. The routing of information, the delivery of data can be things that you're doing not because you're trying to be a good steward inside of Tor or inside of BitTorrent or some sort of peer-to-peer file sharing program. It's because you're just trying to make money in a marketplace that rewards you for completing these very specific trades that meet the purposes of the users of that network. I think those manipulating incentives through code and creating outcomes where the most rational behavior is to participate in growing a bottoms-up new kind of internet or new kind of communication network. These are really powerful things, and ultimately, I think they further enhance, the story and the mantle of Bitcoin as some kind of freedom money, right? Because it creates defense in depth for the underlying Bitcoin network, which today, again, runs on the open internet, which is extremely centralized and has all sorts of, systemic issues with it. Maybe there's a parallel here to it. There's I think it's a line of if we want to replace the money, we'll never be able to do it directly. We'll have to do it in some complex roundabout way that people don't realize is happening.
Right.
It's kind of the same story here, right? If we want to fix the internet, if we want to fix the world even, right, we're going to have to do it in these roundabout ways by which we're just building new incentive structures, new markets that incentivize people to solve problems that we collectively need solved.
Yeah.
So it's an interesting kind of I don't know, would you call it socialism as code? But it's not, because it's capitalism, because everyone's getting paid to do it. But it's also a planned economy because we wrote it in code. It's something that's new. It's not easily categorizable. I think that's why I'm so excited about it.
Yeah. I mean, if you want to put a political lean on it, I don't see how it could be either. I mean, obviously, I guess it'd be more capitalism just because of the economic incentives. It's sort of like this Murray Rothbard thesis of pursuit of profits being the most noble thing that you can do, because it's the pursuit of profit that then makes you noble, right? So I think
unlike the caricature of capitalism that is sometimes offered, it's not an unrestrained pursuit of profits, because you can't exploit those who are paying you, because the only thing you can sell them is exactly the thing that they expect to buy.
Sure.
So in that sense, it's very powerful protections for the consumers as well.
Now, when you think about that, and you've kind of thrown out some big ideas of what it could potentially evolve to, have you thought of maybe any practical things? Have you seen any practical things, or do you have a couple of ideas of where it could go? Maybe say to rebuild other industries like energy or communications or content, something like that. Governments will never stop printing money, so inflation, it's not going away. Now, if your money's not earning at least 10% a year, you're losing purchasing power. Now, that's why I talk about Bitcoin. It's the #1 way to beat inflation and secure your future. And the question I get asked almost every day is, where do you buy your Bitcoin? Now, for years, I've personally used River.com, and I only take on sponsors that I use and I trust. And I trust them because River's Bitcoin only, they have 100% reserve, and they keep your Bitcoin safe in cold storage with no middlemen. And you can actually talk to a real person, a US-based support dedicated manager. Now, try getting that peace of mind from Coinbase. Of course you can't. Now, The perks, if you set up auto buys, you can pay 0 fees. Plus, instead of your bank paying you, 0.4% on cash, River pays you 3.75% on cash paid in Bitcoin. So if you're ready to build your Bitcoin position with confidence, go to river.com/markmoss and get up to $100 in Bitcoin when you sign up. Because freedom starts when you own your money, and your money starts with Bitcoin.
Yeah, I mean, I think I'm a little bit doing Mott and Bailey here with you, unfortunately, where like when we talk about these abstract ideas, I'm willing to get really, big-minded and say, well, what if,
Right.
all of the internet works in a different way and it's all running on Bitcoin? But truthfully, when push comes to shove and it's 2025 November and I'm looking out at what's actually out there, the answer is there's not that much right now. Like, yes, of course, we have Bitcoin, and Bitcoin is happily doing the thing it needs to do every 10 minutes. And we're starting to now build things like layer twos and so forth. But at the end of the day, transactions are still incredibly cheap on Bitcoin. There simply isn't enough
Which is
demand for us
interesting,
to
isn't
build.
it?
Yeah,
Last time Bitcoin was in this price range, the block space was full, and now the block space is empty.
exactly, right.
But something I've tried to think about it. Right, actually, I put together this thesis last year. I did the closing keynote at Bitcoin Mina Abu Dhabi, and I talked about this. Charting Bitcoin's sort of evolutionary path, and I used this 50-year technological revolution, this K-wave cycle, and then use like an S-curve over the top of it, and then I kind of put in like monetary evolution. There's 4 steps of monetary evolution, and anyway, I tried to put all this together, and I basically said I think between 2030 to 2040 is where Bitcoin sort of hits that medium of exchange phase, and I think it'll be primarily driven by AI agents. And because
Hmm.
they need to transact microtransactions at high frequency. And then I spent a lot of time thinking of all these different ways that could potentially happen. And of course, it's all just guess and theory. But like one thing we're starting to see, and Elon Musk just talked about it, like maybe having this fleet of auto taxis have data centers or turn into nodes of data centers. And so you could think of like AI agents paying other AI agents. What do they pay for? How much does it cost to hire another AI agent? Well, it's the cost of compute and energy. And so you could see AI agents using micropayments over Lightning to pay for inference on different models or something like that, maybe.
I mean, I think you're absolutely right. I think maybe I've been having a lot of thoughts like these for a number of years. Like it's part of, I think, what drew me to Bitcoin is the promise of Bitcoin as a fairer, sounder money, but also a tool that we can use to build things. In particular, like things like a more efficient, fairer, open internet, the kind of thing that I was told we were building in the 90s, but never quite materialized. Instead, we just built a centrally managed internet in a variety of ways. We kind of all centralized on platforms like Google and Facebook and social networks and email and all these things. Um, I think AI is like potentially a very interesting decentralization vector. I think today AI is fantastically centralizing. Like that's where AI is as the technology right now. You need massive amounts of data, compute, and capital in order to build AI today. And then the business model for AI is, of course, then renting the capability out to users, and the centralized builder and purveyor of the AI profiting from that process. But that's today, right? I think I saw a really interesting talk at DEF CON a month or two ago where someone had built an AI that goes out and finds bugs, right, in bug bounty programs. Like y'all may have heard of like HackerOne or other platforms where companies are paying individuals to find bugs and flaws in their software. So someone programmed an AI to go out and, you know, apply for those bounties, find the bugs, document them, get the money from the bounty program. And it was interesting. I think the AI wound up making something like hundreds of thousands of dollars in bug bounties during the course of the year or the experiment that this researcher was running the program in. And it's very impressive, right? The idea that you could just kind of put together this piece of code that is sitting there earning a few $100,000 in bug bounty, except that it costs like $1.2 million in tokens. But that's an interesting gap, right? I think that's a today issue. As AI becomes more capable, as it becomes more efficient, there's some line that gets crossed, right? Like how much Bitcoin can the AI earn versus what does it cost to run the AI? And when those two things cross, I think someone is going to build an AI that is no longer necessarily controlled by one person, that just kind of lives out there. And it's self-propagating because it's able to earn enough Bitcoin to continue to pay for whatever cycles that it's consuming from wherever it's consuming them from. That hasn't really materialized yet, but if it starts to materialize, I think the world gets really, really, really interesting
Yeah.
because now you and maybe bring some aspects of evolution and optimization into AI beyond human beings designing them to solve specific problems. And then it really gets interesting because now Bitcoin, I think, kind of becomes something of an energetic currency for this, kind of, I would even call it like a new kind of life, right? Like, and it's out there trying to make its, trying to pay for its thoughts and feelings and its memories in Bitcoin. And it does so by providing services. So I think a lot of what previously I might have interpreted as human beings will go out and we'll build we'll build payment things, and we'll build data transfer things, and we'll build all these nodes in this marketplace that helps change the internet. Maybe it won't be human beings. Maybe it'll be AI that understands that if, like, everything Mark says on Twitter is really valuable, people want to read it. If I just store it, then they'll just buy it from me and I'll give it out to them and I'll make Bitcoin doing that. And then that way I'll pay to make copies of myself. And now is this a stable pattern? Now you have a Mark Moss repeater bot somewhere out there on the
Yeah.
internet, but there's one for everybody. There's one for general content. These are patterns that we haven't really tried yet. And I think it's really interesting to see what effect AI and Bitcoin will have on each other as they kind of co-evolve.
I want to ask you about another emerging Bitcoin and computational problem that's coming up, and that's quantum.
Aha, yes.
I mean, we can already see the problems AI is creating. So, whether that be trying to find these bounties or cracking codes potentially. Obviously, there's all types of levels of phishing attacks that AI has been able to do. And we talked about Coinbase earlier. Like, Coinbase hasn't been hacked, but they've lost hundreds of millions of dollars through social attacks, right? Because AI is so
Yes.
smart. But the big threat that we have right now is quantum computing. And I've seen everything from its 10 to 15 years out. No, it could actually be much shorter. I've seen that, well, really, it's only the first years or so worth of coins that haven't been moved. They need to be moved to a new address. But then potentially even moving to a new address exposes the key. There's, potential mining pool, whatever. Obviously, as somebody who's been building security around Bitcoin for a long time, how do you view the threat of quantum?
Slow burning, but dangerous. Yeah. Like I certainly would not state that I'm worried about it today, either individually or at my business or for our clients. Um, but it will be a concern in our lifetimes. Like that much I feel very confident about. Again, when exactly? Is it 10 to 15 years? Is it 5 years? Is it 25 years? I think there's this concept of Q day. Like when does the quantum computer become powerful enough to be a threat? And I think currently it's like 2035 or some number. I don't know who comes up with these numbers, but there's clearly a range and distribution of estimates of when this starts to become a real concern. I think something that's not necessarily talked about enough in the quantum computing discourse is how much Bitcoin is a factor, and in fact, the Bitcoin price is a factor in the incentive structure for driving quantum computing. I think most people who are working on quantum computing in a professional way, like researchers and scientists, think that they're building tools for understanding matter. Right. I think sometimes when quantum computing is described in a popular audience, we'll trot out the traveling salesman. We'll talk about cryptography and we'll talk about all these computery things. But a lot of people actually working in the field think of it as, well, this is just probably the most effective way to simulate quantum matter. And why would you want to simulate quantum matter? Well, because you want to do drug discovery. You want to engage in material science. You want to figure out new things that you can build in the world out of atoms. And quantum computers are also really, really good at that. And so from that perspective, what's the monetization pathway for quantum computing? Well, it's presumably you're going to come up with some new material, or you're going to come up with some new kind of drug that has some great effects, and then you're going to make money eventually because of that thing. But that's very indirect. A new drug is going to have to go through trials. There's a supply chain. There's all sorts of issues. Like if quantum computers are just stealing Bitcoin, that's a lot easier for them to accomplish and a lot more direct path to monetization. But Bitcoin is still small compared to the potential revenues from revolutionary drugs that can be brought to market, or new synthetic materials potentially. That won't always be true.
Or the
And just a few,
DoD, or the Treasury, or Wall Street. I mean, Bitcoin's small compared to all of those.
yeah, exactly. But in just a few cycles, right? If Bitcoin's price continues to appreciate by significant amounts year after year after year after year, at some point, just the idea of stealing Satoshi's coins becomes a meaningful incentive towards spending resources on optimizing quantum computers. And I think what's also not appreciated widely, perhaps by the Bitcoin community, is how nonlinear development and progress in quantum computing is. It's not the kind of thing where it gets incrementally 10% better every year and therefore we can track and predict it. There are error correcting algorithms and new hardware approaches and stuff that were they to become successful could meaningfully change the roadmap and the estimates for when Q-Day comes along. So I definitely worry about these things.
But
I
do you think
think,
it's worrying about like the unknown, right? So it's like if I'm worried about someone breaking into my house or attacking the United States, then what are the potential attack vectors of the United States or for my house? And then how
Mhm.
do I protect myself against that attack vector? But like, how do we protect ourselves from aliens? I don't even know. What would the aliens even do, right? So
Sure.
it's like sort of like we're worried about a what if maybe one day, but we don't even know what that attack vector would look like. So we don't really even know how to protect ourselves. So maybe Bitcoin isn't quite as big as that because we can say, well, it can attack the cryptographic key. But then
Mhm.
kind of going back to what I said, it looks like we have some fixes that are already in line where we could just move the keys to a new signature, right?
There are definitely some plans. I think what's interesting is in only in the last couple of years, I believe, did like NIST, for example, start recommending, start disrecommending certain cryptographic algorithms largely because of a fear of upcoming quantum computers, and started in fact recommending certain post-quantum encryption schemes because they're believed to be resistant against whatever may be coming. So that's an interesting transition that like even at the DoD government level, like they're starting to recognize, hey, maybe you should be switching over to this. Also, Google, I believe, and Signal have started in certain of their software to start using post-quantum cryptography for certain use cases. I think it's also built into a couple open source encryption tools like OpenSSL and gosh, something else I'm forgetting right now. So it's just starting to show up. I think it's for a long time. I think there was this idea floating around in that like somehow post-quantum computing is like not possible, or it's like really bad or really slow, and like it still has challenges, but it's a lot more practical than I think a lot of people give it credit for. I think what's missing is like the killer app of like who cares enough to like want to invest in this and want to switch their systems over to using it and maybe deal with interface changes or latency changes or other issues that are caused by this. I think Bitcoiners are going to care sooner than most communities, just because again, I think it's easier for an attacker to make profit by attacking Bitcoin than it is to go out and do material science discovery.
But do you think since Satoshi warned us before he left about quantum, people have been talking about it
Mhm.
since day one. They're still talking about it today. When we think about, and again, post quantum, how do we know what post quantum is when we don't even have quantum? But if we think about that, I mean, it seems like, and that's why I'm trying to ask you because you're the expert here. It seems like we have pretty good solutions to secure coins that we can move, but maybe it's Satoshi's coins that are at risk. Do you think that that's a sort of a fair way to look at it? Probably all the coins that can be moved could be safe, but Satoshi's coins will
Mhm.
be probably the biggest thing that will be at risk in that post-quantum world. Or is that too simplistic?
Well, so I would say a couple of things. It's like, number one, I think we have a good understanding of the capabilities of quantum computers, even if we don't have a good engineering capability to build the quantum computers. So we can make claims about, well, in the future, when quantum computers become more capable, here's what they'll be good at, and here's what they won't be good at. I think those are things that we understand today.
Okay.
So that is what allows us to even define things like post-quantum computing algorithms and procedures,
Got it.
because we know that even if the quantum computer existed, it wouldn't be able to do this, right? So
Right.
we have some confidence that this tool exists. And to your point, it definitely does exist, and to the point where it's being recommended and incorporated into certain software already outside of Bitcoin. Again, what's hard about Bitcoin is because it is decentralized, because no one runs it, because NIST can't decide to go change it for everybody. There has to be kind of a bottoms up adoption process. And that's where I think some of the fear is, because, okay, fine, maybe you and I will, so first of all, Bitcoin has to solve the how will we get consensus about what changes to make? Which of these schemes should we use? How should it be spelled and implemented and all that stuff? Let's say we even solve that problem. Well, you and I can then go ahead and decide to take action. We can take our funds from whatever SegWit wallet we have today and move it into a post-quantum version of that wallet using whatever quantum or post-quantum computing technology Bitcoin decides to adopt. But again, what about Satoshi's coins, right? Like we can't make that. That's not a technology statement. That's I don't know, a policy statement or a consensus statement. Like what should be Bitcoin's attitude towards coins that are not moved into post-quantum structures? Should we just let them get stolen? Should we, destroy them? There doesn't seem to be any great solution to this problem. And I think, unfortunately, because Satoshi's coins are so numerous, or at least what are thought to be Satoshi's coins are so numerous, this will be an issue at some point.
I think we just have to let it go. I think we just do nothing. That would be my guess. I mean, the market just absorbed 400,000 Bitcoin selling in the last 60 days. Like, we can absorb 1 million. By the time that comes in 5, 8, 10 years, like, we can absorb 1 million coins.
I like that idea because it is the simplest. And I often think in especially in a decentralized context like Bitcoin's, the simplest idea probably wins.
And it's the most free market, decentralized way. Otherwise, we're making some changes to Bitcoin that could change the long-term trajectory of Bitcoin, would be my fear. I also think, though, is that, you talked about the bounty of being able to get those coins, for example, but I would think, and you correct me if I'm wrong on this, but I would think, solving this or creating this quantum computer is such a big task. It would most likely be a Google or OpenAI or something like that creates it, not some like indie hacker in Pakistan, most likely, right? So it's going to be a Google or something like that creates it. And Google's certainly not going to go steal Bitcoin, right?
Or it's a nation state that has decided they don't want to play by the rules and they have the resources and the desire to do this.
But if they wanted to steal Bitcoin for economic gain and they destroyed the Bitcoin network, then all the work they did to steal the Bitcoin becomes futile and worthless.
I guess the question is, would it impact the Bitcoin network itself or not, right? Like Satoshi's coin systems aren't doing anything right now. They're just kind of sitting there, right? So if they sort of entered the market, it could potentially even be positive, depending on, I guess, who took them, I suppose. Maybe there's the argument that the United States rises to this challenge and decides that they're going to do it because they don't want anybody else to. The game theory is, I think, interesting because it's very price dependent. It kind of depends on what you think the return is on taking these actions. Certainly, I think a silly thing to do would be to steal all the Bitcoin and then, like, I don't know, sell it for dollars somehow. Like, that doesn't make any sense. And I agree that's not a real worry.
I think if they took Satoshi's coins, but the rest of the network still was secure because it moved to post-quantum encryption, then it doesn't really affect the Bitcoin network, and so probably doesn't affect the price. And hey, congratulations, you got the bounty. Versus if they stole all the Bitcoin and crushed the network, then it all becomes worthless. And so then they'd probably be better off going and stealing money from the treasury and buying Bitcoin than in that case, I mean,
I think the worst outcome would be something like we dawdle, we fight amongst ourselves, we can't decide on a post-quantum solution effectively, and meanwhile some crazy nonlinear change happens and quantum computers just become fantastically easier to make because of some simple new idea that someone came up with. That's a bad combination. We don't want that, right? We want to stay ahead of the developments in quantum computing to make sure that the outcome is more like what you described, which is everybody who cares, everybody who's actively holding their coins has plenty of time to go through this transition, and it's easy, and then it's really only the stragglers and the lost coins and Satoshi's coins which are left. That is probably one of the better outcomes, and I think in a situation like that, it would be pretty easy to say, just don't do anything, let them get stolen. I think where you might start to see more agitated and centralized concerns happen is if we aren't able to achieve that, if it's perceived as some kind of emergency that we have to take action now, that's usually the door through which centralization starts to enter.
Yeah, that's what I'm afraid of. All right, Drew, let's wrap it up. I want to ask you one question here. So for someone who's listened to this, they're skeptical. They still think Bitcoin is just digital gold or even more useless than digital gold. Peter Schiff still wants to tokenize gold. What would you say to them?
Maybe I'd say different things. I'm not sure what I could say to someone in a Peter Schiff position at this point. I think that's increasingly an ostrich head in the sand kind of attitude. There's something here to the point that even those who railed against Bitcoin for years are kind of coming on board and admitting that their firms and their family offices and so forth need to get involved. So I think I would kind of be at a loss for that person. The other person I think I'm much more interested in talking to, because I think someone that believes that Bitcoin is money and money alone and that's all it ever needs to be, and we don't need to worry about layer 2 payment networks, we don't need to worry about all these concerns. I sort of, I wonder what they think the world looks like in 50 years, right? When everyone is using Bitcoin, but we never built a payments system for it. Like, how is that going to even work? And if their answer is, oh, well, we'll build a payment system, that will for sure happen, but none of the other stuff will happen. Well, now I'm like, well, okay, you've built a micropayments network in Bitcoin. Your micropayments network is a data network. Like there is there's no difference between moving data which represents payments and moving data which doesn't represent payments if you've already built the Bitcoin denominated communication protocol to do that. So you've already invented the thing that I'm saying we're going to invent, and everything else will just happen naturally. Like, people will engage in piracy naturally because it's impossible to stop them from, selling you data. And then if that becomes unstoppable, well, then it becomes real. And then we have to deal with the consequences of that. So for me, it's a little bit like move in steps Socratically and sort of ask, very few people that I've met in Bitcoin believe that we don't need to scale payments and custody in any way, and that we'll all just be fine using Bitcoin, that we should immediately ossify it today, that there are no concerns like quantum computing or others that we need to respond to. I think it's a kind of ostrich head in the sand kind of position right now.
Well, I'd love to dig into that conversation, but that's a whole nother can of worms to open up. So we're going to have to table that one for another conversation, Drew. But, I love to see all the building on layer 2, 3, 4, or 5, but like back to the either unintended consequences or the beautiful surprise. I mean, who knows what happens if we keep tinkering. Anyway, Drew, I want to wrap it up with that. That's a good point. Obviously, you're the co-founder of Unchained Capital. I've been using Unchained for years. I use their multisig. I've got my dad on Unchained so he can set up his legacy, his will, all that on there as well. We'll link to that down below. Anything else you want to drive people's attention to?
Maybe just to underscore that idea. I got my dad on there too. I'm very proud that I've been able to get so many of my family members to start using Unchained, and also that I'm helping them to do so. Unchained has a feature which we call connections, in which the multi-sig, multi-party collaboration is not just between you and Unchained, it's between you, your friends, your family members, Unchained, other third parties. This allows you to really customize the things that you want to build. So just for example, in my family, I've got several of my more technological uncles who work at Amazon and other places. They're helping the rest of the family who's less technologically capable kind of get on board. Some of them are holding Bitcoin without holding any keys, but they're not using an ETF and they're not using Coinbase. They're relying on the family to hold those keys and protect them, right? I think there's a lot of that happening informally, where you'll just, call a friend or family, hey, buy some Bitcoin for me and hang on to it. But this is a more formal way to do that, in which you still get to have legal ownership and control, but the custodial part has been delegated by you to someone that you trust, that maybe even has, connections with your inheritance plan and all these ideas. So I would kind of bring it back to, if you're not in Bitcoin, you got to get into Bitcoin.
Yeah.
If you're in Bitcoin, you want to do it right, please use Unchained or some other collaborative custody type service. I really believe that it's the best way for most people to hold Bitcoin, even if you're not using Unchained. There's many providers now in the space. And then if you're using Unchained in particular, really look at our connections feature, because I think that's not only a way to improve your own inheritance procedures, it's also a way to help bring in your friends and family that maybe aren't as sophisticated as you, right? They're not daily watchers of the Mark Moss show. They're not up to date on all the hardware wallets. If you're that person, you can help them.
And what I love about Unchained is you have the concierge service, because this is all pretty complex and I don't know which is the best option for me. And so you can just get somebody live on like a Zoom call that can just like walk you through it, because it is crucial that you don't make a mistake. And so anyway, having that there is a good option. We'll link to that down below. All right, Drew, we're going to wrap it up with that. Thanks so much.
Thanks, Mark.